Are you hearing about what's happening in the stock market and wondering what this might mean for your portfolio or your retirement account? If so, this video is for you. The US has imposed tariffs on countries we trade with. To keep it simple, a tariff is a tax that's added to imported goods. And while the importer is the one who pays the tax, the cost is then passed along to the consumer, you and me, through higher prices. Right now, no one knows if the tariffs are here to stay, if they'll be paused, or if we'll be able to successfully renegotiate with our trading partners. Right before filming this video, I did read that some of the tariffs have been paused. But until new agreements are in place, there's likely going to be a lot of back and forth. This back and forth creates unpredictability, and the stock market does not like uncertainty. This is what causes the market to go down, and in the last few days, we've seen the market dip to levels that we haven't seen since March of 2020. I would like to give you a few tips to consider during these uncertain times, and as always, this video is not financial advice and is created for education and entertainment purposes only. Tip number one is to stay calm. If you're invested in the stock market right now, your account is likely down, and that's normal during volatile times. The best thing you can do right now is stay calm and remember that the news makes money off of keeping you glued to the screen, feeding your fears. What you don't want to do is start to panic. What I see happen a lot of times is people will pay too much attention to the news, start to panic, and then get in their mind that they need to sell before they lose all of their money. That's what we call panic selling, and a lot of times those people who start to sell or think that they're going to sit out as the market goes down and then buy back in when the market goes up ends up missing the upside. And so don't get me wrong, there are times when you're in a bad investment and the best thing to do is just cut your losses and go the other direction, but panic selling is not one of those things. You don't want to sell just because the market goes down, trying to time it and buy back up, buy as it goes back up. Just stay put, stay calm, and try to block out the noise. Tip number two is to invest according to your risk tolerance. If the volatility in the stock market has caused your portfolio to dip below a level that you are currently comfortable with, it's likely that your portfolio is constructed with a risk tolerance that is too high for you. On a base level, your risk tolerance refers to the percentage and type of stocks and bonds your portfolio holds. That is why it's important to make sure your portfolio matches your personal risk tolerance. If you don't know what your risk tolerance is, I'll link a free risk tolerance questionnaire in the notes below. Feel free to take it. It's just going to take you a few minutes and it'll let you know how your portfolio should be constructed. Tip number three is that there's opportunity in the chaos. A famous Warren Buffett quote is to be fearful when others are greedy and to be greedy when others are fearful. Basically what he's saying is that when others are fearful and the market is down, usually that's the best time to buy. Some of the biggest investment gains I've seen in my investment portfolio has been by buying what we call the dip. When the market dips, buy the dip, and then when the market returns back to whatever price it's going to return to or possibly exceeds where it was before it dips, you get to ride it all the way back up. If you've seen some of my previous videos, you know that I've been doing my $1 a day investing strategy on the Robinhood platform, and I've been buying SCHB, which is a Schwab broad market fund. Now, just last week, I was buying SCHB at $22 a share, and I'm putting $1 a day in it. But now, this week, I've been buying it because it's dipped down. It's been going for $18 and $19 a share. And so for the same dollar I'm investing, I'm getting more of a share this week than I was last week. So you need to think about it like this. When the market dips, it's like going to think of the stock market as a store you like to shop at, like the supermarket, maybe buying your groceries. When the stock market dips, I'm going in there and I'm buying something I'm already buying, but I'm buying it on sale and at a cheaper price. So I'm getting more for my money, just like you would be in the grocery store. So buying the dip or buying it on sale a lot of times is a great time to buy. Tip number four is to zoom out. Don't just focus on what's happening this week or this month in the stock market. Think about your investments from a larger perspective. What's going to happen over the next 5, 10, or 15 years? The lines you see going up and down drastically on stock charts right now are just going to be a small blip on a bigger chart 5, 10, 15 years from now. So think about what you want your investments to look like over the next 5, 10, 15 years and think big picture. Don't get caught up in the moment of just seeing what's happening today. Tip number five is to get a financial plan. Everything we're talking about, market dips, risk tolerance, emotions, buying opportunities, it all makes sense when it's connected to a big picture. Having a financial plan will let you know what your risk tolerance is, why you're invested in the first place, what to do when the market goes sideways. Having a financial plan will give you perspective on what's happening right here and right now, but it'll also give you perspective about 5, 10, and 15 years and how the decisions you're making right now will affect you over the course of those next 5, 10, and 15 years. So having a financial plan and having your investment strategy plugged inside of that financial plan is a powerful tool. I want to encourage you, if you don't have a financial plan, today's the day. Get a financial plan. So the key takeaways for this video are to stay calm, invest according to your risk tolerance, there's an opportunity in the chaos, zoom out, and get a financial plan. If you want to organize your money and you don't know where to start, or maybe you have questions about investing, feel free to book a complimentary call with me using the link below. Also, if you want to connect with the community of people who are passionate about taking charge of their financial future, join the Steadyworth's Financial Fit Club. That link is below as well. Have a great day, and we'll see you in the next video.